is going to be discussing how to properly perform due diligence. So a little bit about Jorge. He is an active and passive full-time multifamily investor with 1,700 plus stores as a GP and 1,400 plus stores as an LP. He owns JNT Developers, a construction company that focuses on helping multifamily investors with their renovations. His goal is to reach 10,000 doors by the end of 2021 by creating strategic partnerships and implementing the proper systems for scalability. All right, well, if you want to go ahead and share your screen, we can get started. There we go.
All right. Okay, so I'm going to be going over due diligence, how to properly perform due diligence on a multifamily property. So first, I'm going to start with a quick little disclaimer. Some of the numbers I'm going to go over, there's a lot of variables when purchasing multifamily, a lot of different property classes, and the numbers I'm going to present are not necessarily work in every area and every property. So just do your own due diligence and figure out your own estimated numbers. As far as the slides, I tried to pack a lot of information into these slides. So here's the link if you want to download them, because I may start moving pretty quick through some of them. And I'll also give this link at the end as well. So this is what I'm going to be covering. I'll go over a little bit about myself and the two companies I own, and then I'm going to go through the whole process from the property tour, before you have it under contract, what you should be looking for then, give you some high-level numbers you can use for your CapEx, and then what you would actually look for when you do your property tour, then some rough numbers you can use to come up with a better CapEx budget after you tour the property, then what you should do for your due diligence inspection, what you should avoid, and what you need to be looking for when you do your due diligence so you don't run into issues later on. Then finalizing your scope of work after your due diligence is complete. Then why a pre-construction meeting is important, and then how to execute from there. And I've got a couple bonuses towards the end. So a little bit about myself. Melissa said quite a bit there. I've been doing real estate investing for over 13 years. Started in single family, did a lot of wholesales, did a lot of fix and flips, then did some smaller multifamily and some rental properties until about a little bit over 3 years ago. I started focusing on large syndication multifamily deals. And since then, I've got 720 doors under management, another 850 doors currently under contract, and then I'm also invested passively in several properties as well. I also opened a construction company over 10 years ago. When I started to scale my single family, I realized to do quite a bit of fix and flips, it would help to have a construction company, and that's why I started that, and my experience as far as the due diligence and the CapEx. Who's Elevate? Elevate is my real estate investment firm that we purchase multifamily properties in. Like I said, we syndicate our deals, and we offer good returns to our investors. And there's the team right there. And then JNT Construction is my construction company, and we focus on doing our own CapEx as well as other investors and managing the whole aspect of the project and taking care of everything from due diligence to executing the actual project. Here I just got a couple pictures showing some before and afters of some of our projects, and just showing you the type of transformations we do to these properties. There you got quite a bit of before and afters. We really like to get the curb appeal to pop, and then make sure that we've got the nicest units when they walk in. And then this is just some of our clients, some of our multifamily clients on the construction company. And here we go. So as far as what I call the pre-property tour. So what does that mean? That means you've got a deal that is looking promising on the high level. You have not seen it. And these are the questions I like to ask the broker or the seller, depending on who you're dealing with, before even getting out there. So some of these are pretty detailed, and you may get some kickback from the broker or seller. I still ask, because the more information I have, and I stress this to them, the more information I have, the better offer I'm going to make the more confident I am on what it's going to cost me to get the deferred maintenance or the upgrades I plan on doing done, the better offer I can make. So I'm not going to read all of these. Like I said, you can get these slides, but basically I want to have details on interior units. How many classics are there? How many upgraded units are there? What different type of upgraded units do they have? If they have different levels of upgrades. Definitely want to know how many down units, because that can change your CapEx budget dramatically. Then a list of the CapEx they've completed. That's super helpful. I want to say most owners should have that. I have ran into some owners that don't have much of anything, but for the most part, they should have that. And that can really help with knowing, let's say the roofs were replaced 2 years ago. Okay, well, they should be in good shape. I'm not saying don't inspect them, but on your high level, you can probably not put replacing the roofs. And, more questions about the plumbing, especially if there's boilers. Same thing with the AC, especially if there's chillers. Then you can take that information and you can kind of get an idea of what your CapEx numbers, once again on the high level, would be. This is still before you've even been to the property. This is kind of when you're doing your quick underwriting, your quick and dirty, is it even worth making a trip out there? Once again, little quick disclaimer, these numbers are based off of Class C type properties. And once again, depending on the area, it may not be like this, but I would do $3,000 per unit if most of the units are renovated and there's not that much deferred maintenance. Then $6,000 if there's several units that need to be upgraded and you've definitely got some deferred maintenance. Now that doesn't mean it's going to cost each unit $6,000. It's not going to cost $6,000 per unit. This is including the deferred maintenance as well, or any exterior. Plus your business plan may not be to do every unit, so you got to take those things into account. And then if you've got a property that's in pretty bad shape, a lot of deferred maintenance needed, several down units, to $10,000 per unit. If you're looking at B-class properties, your finish outs are going to be more expensive. You're probably going to do more to the amenities, so these numbers would have to increase, etc. Then I would take those numbers and I'd plug them into my high-level quick and dirty underwriting. As you can see, I'm not really sure you can see my cursor, I would think so. I plug it into right here where it says CapEx per unit. So 6,500, this was one that probably had some units that needed to be renovated and some deferred maintenance. Then this will tell me if it's worth to go take a look at it. And if it is, then at the property tour, these are the things that I would look for. As far as the landscape, you want to see how much landscape you're going to have to do. I like to take a lot of pictures because you can always refer back when you're getting into your rough estimate numbers, which I'll show here in a second. Then your exterior walls, you want to see, is the property going to need paint? Is it going to need siding repairs? Most likely you're going to have some carpentry you got to replace. How much of that do you have to replace? Once again, pictures. I would get pictures of every single building. Then you want to take a look at your windows. What condition are they in? Are they single pane, double pane? Are they aluminum, vinyl? Are they falling apart? Are they in good shape? A lot of the times, if we are doing a older properties, got aluminum windows, single pane, it's not the most appealing look, but you can easily add solar screens to it and it'll change the curb appeal dramatically, and also give you some energy savings as well. So roof, you want to see what type of roof is it? Is it flat? Is it sloped? Is it shingled roof? Is it a TPO? And then dig into, let's say you sent those questions to the broker, but you didn't get the answers back. Well, if you're prepared and you ask this to the on-site manager, usually they'll give you the answers. So usually I would take this checklist with me and make sure that I get everything answered. Then interior units, you want to try to see as many as they allow you to. On a property tour, it's somewhat limited, but you should be able to see all the vacant units. And I would definitely stress to see the down units. You want to see how many there are, how bad they are. Like I mentioned before, that can change your CapEx quite a bit. You want to see what their classic units look like. so you know how much of an upgrade you have to do. And then take a look at what they're calling upgraded units and see what they've done in those units. Plumbing. This is the property tour, not your actual due diligence. So really all you can do is look for the cleanouts and see if they're PVC or cast iron or any other type of material. But you know, sometimes it doesn't tell you everything. Sometimes the cleanouts could actually be PVC and you still have cast iron sewer lines, but it'll give you an idea of what type of shape the sewer lines are in. Then as far as the boilers, take a look at it, see what it looks like, see if any of the parts look new. Snap a picture of the label on the unit, which if you send that to a licensed plumber or to a general contractor that's used to dealing with multifamily, they can give you an idea of the condition, or not really the condition, but the age of it at least. Then same with the HVAC, as far as the chillers, take a good look at those, snap a picture. If you've got individual units, even if it's window units, you want to kind of just get a feel for how many of those are older. And you can tell by just looking at them really. Foundation, you want to walk around, look for cracks on the exterior, look for cracks in the brick and separation. I know here in Texas, you're going to see stress cracks for sure. It's the separation that you want to see, how much separation you're getting, and that'll really tell you how much issues you have in the foundation. Same with the drywall inside the units. Look around, the windows and doors are usually the first to go. And then pay attention to the amenities. What type of upgrades do you have to make to the existing ones? What amenities are you going to want to add? Parking lots and walkways. Get a really rough idea of how many big potholes do you have, how many walkways you're gonna have to level, and if you get an idea of how much square footage, you can come up with an estimate there. Then fences and gates, just take a look at it, see what kind of condition it's in, see if the gates work, your dumpster surrounds if you need those or need to repair those. And then cameras and security, are there any on site? If they are they actually working? Once again, that's something you can ask to the on-site, or are you going to need to add some more? All right, here you've got some rough CapEx numbers for the interior units, and then some for the exteriors. It's not every single item, but it can give you an idea of what some of these things cost. Once again, these numbers are based off of, we mostly do Class C properties. Then this is what I would put together after doing the property tour. So if I've taken all my notes, and usually I'll do this and have 6 screens, and I'll have all the pictures open and all my notes, and I can probably put this together in maybe 15 minutes. But this would give me, so here's the second page, a really good idea of what it's going to cost for the CapEx. For instance, this exact property, our budget ended up being, I want to say we ended up maybe 20,000 less than this after we did our due diligence. So the numbers are rough, but I mean, it's a educated estimate. So then you've got due diligence. Let's say you revised your offer and you've actually got the property under contract. So now it's time to perform your due diligence. So I want to stress that you want to walk every unit. You personally don't maybe have to walk every unit, but either the property manager, or if you're hiring a due diligence inspector, or if you've got a general contractor that's going to do it for you, I do suggest you're involved and you do walk several of the units yourself, and then make sure you have a good system, whether it's you or the contractor or whoever's doing it for you has a good system of organizing all of this. We use an app, and that's where all the pictures get stored, and it makes the information usable versus just having it there. And I say every unit because you don't want to miss any down units. I know I think the third time I mentioned it. You're talking about maybe spending $5,000 on a unit compared to possibly $20,000 on a really bad down unit. So it's pretty important. Then, like I stressed, yeah, you want to make sure you're organized and efficient. A lot of pre-planning before you get out there and do your due diligence. You want to, so there are some professionals that you want to get out there to inspect with you. So you want to make sure you have a licensed plumber that's going to scope the sewer lines, and they're going to do a good inspection of the boilers. You want to make sure you have an HVAC company that goes out there. If you have chillers, make sure they inspect the chillers, or if it's individual units, that they take a look at it and give you a good report on what you have and the condition of them. Then your foundation and drainage, you want to get a foundation company out there to take levels and give you an estimate of what it's going to take, or if you even need repairs. Termites, you want to make sure you don't have any big termite issues. And then you want to get a roofing contractor out there to check on the roofs. I stress, do not go by what the broker or seller tells you on any of these items. You know, get someone out there to look at them and inspect them. Then you can also get a general contractor like our company, J&T, to go out there and manage all of this for you. The most important thing there is just make sure the expectations are set on what they're going to do, what they're going to inspect, what they're going to supply you with. So I have seen a lot of companies that will do the due diligence for you. They'll inspect it and they'll show you what's wrong or what they found's wrong, but they won't attach any numbers to that. They won't give you any estimates. And I mean, that's good information, but it's not the whole thing. You know, you want to know what your CapEx budget's going to be when you're done with your due diligence. So one other mistake I've seen is don't just look at the deferred maintenance while you're doing your due diligence. Take this time to also look at what you want to upgrade and what those upgraded costs are going to be, so you can have your total CapEx budget. I see some investors that just worry about the deferred maintenance, but then that leaves a lot of guessing to your upgrades, which the less guessing, the better. And then finally, on the due diligence, just make sure you're involved as well. You know, even if you're going to hire a GC to do it all, or you know, some property management companies will as well. Just be very involved, be there, oversee everything, and set the expectations in the beginning, and know what you're going to be getting from each party involved. This is a really quick video, so I'll probably let this one play, but this is an example of us during due diligence, and you can see how if this is not planned and organized well, it could be mayhem. Here we go. Yeah, so as you can see, I mean, there was, I think at one point we had maybe 30 plus people on site, and there's a lot going on. So here I've got a couple items that you do not want to miss when you're doing due diligence. This is the top 5 most common that I've seen that get overlooked. The roofs, I know I mentioned it a couple times, but not just looking at the roofs, but getting a really good idea and getting a professional up there to look at it. You know, if you got a flat roof, you want somebody to do a core sample. So what a core sample is to a flat roof is you actually cut into the roof and you see how many layers you have there and what your bottom decking is, you know, what is the roof actually on top of. And that just gives you an idea of what you're working with. You know, if whether you need to rip it all off or whether the system can take an overlay, which would be less expensive. Then there's also several things you can do with roofing to save some money. You know, if it's you could do some fluid applied, or there's a ton of different roofing systems. So just make sure you're working with somebody that is familiar with working with investors and multifamily. Then you've got your exterior walls and balconies and walkways. So you want to take a close look at this, especially if it's stucco. You want somebody that's familiar working with stucco to go take a look and make sure that it's not holding moisture and I don't know, we've worked on several projects where we've literally had to come in and tear all the stucco out and redo it because it was not flashed properly and water was getting underneath and causing a lot of damage. Same with the siding. You know, when you're looking at the exterior walls, the bottom line is don't just assume it needs paint. You know, really get into the covering, whether it's stucco, siding, brick, whatever it is, and figure out the condition of that. Then with the balconies and walkways, just pay close attention to the structural piece of it, whether they're going to need extra support or not. Sewer lines, like I mentioned, you want to scope all your sewer lines. You know, there are some issues with doing this. Some of the times you're going to run into sewer lines that have a bunch of built up grease, and without jetting the lines, you won't really be able to see all the issues by putting a camera down there. You know, at that point, there's not really much you can do. Hopefully there's some lines that you can take a good look at and then use that as an average of what you might be dealing with. You're not going to go in and pay to have the lines jetted. One, you don't own the property yet, and then there's liability that can come with that. But definitely get them scoped. You want to know, you know, if you're dealing with PVC or cast iron or whatever it may be. If you're dealing with PVC, whole lot better. If not, you probably want to budget a little bit more in your plumbing. Then you've got your foundation and drainage. These do go hand in hand. I will tell you from experience, some foundation companies only do foundation. And so the issue with this is if you lift your foundation, you fix your foundation, but you don't touch the underlying issue, which is either going to be poor drainage or a plumbing leak underneath. Those are the two most likely issues. Then you're just going to pay to have the foundation lifted, and it's going to, years down the line, it's going to have the same issues because you didn't fix what was causing it. So if the foundation company you're having go out there won't do drainage, then you want to make sure you get a company that specializes in drainage to take a look. And then the last thing is termites. Just get an inspector out there to look for termite damage, to look for active termites. Last thing you want to do is find out you've got to replace a bunch of framing because you had termite damage. So then the final thing is putting it all together, right? So you're done with your due diligence. You had all these crews go out there. You've got all this information. Now you need to take the time and put it together. Either the owners, or if you hired a general contractor that's going to help you do that. You want to finalize your scope of work and your budget, ideally before your due diligence ends. So, you know, if you came across any major issues during your due diligence, obviously you want to get that in front of the seller. And if you've got to renegotiate the price, you know, retrade. I wouldn't retrade unless it's really necessary. You know, if you run into a bunch of plumbing issues, or, you know, the seller told you the roofs were 2 years old, and you got up there and, yeah, they're 2 years old, but they were overlaid over the worst roof anybody's ever seen, and it's not going to last. Then you want to have, like I said, the full scope of work, including your deferred maintenance, your updates, everything. What's it going to cost? So then you can go and you can update your underwriting and make sure everything still looks good before you move forward with the deal. Then the pre-construction meeting. So, you know, let's say you're a couple weeks out from closing now, or even a month from closing. So this is where I see the ball get dropped a lot. You know, the investors get past the due diligence, and then usually it's because they're very wrapped up in raising the equity, which I completely understand, but it's valuable time that can be used to get everybody on the same page. And that way you can start your business plan and your CapEx right away when you close on the property. So what we do is we set up a pre-construction meeting, and it's going to have the general contractor there. It's going to have ownership, property manager, and anybody else that's essential to getting the CapEx completed. We're going to sit down like you see here. This is one of our pre-construction meetings, and we're going to go through the full scope of work, make sure that everybody's on the same exact page. We're going to go through, I don't know if you can see there, but there's some finish outs, some carpet and paint colors. We're going to go through all the finish outs, make sure everybody's on the same page. We're going to go through expectations. You know, what are we going to get on a weekly basis? What are we going to get on a monthly basis? How our change order is going to be handled. How's our progress going to be handled? What are we going to do with interior units? Who's going to track it, etc. Then this way you can be ready. Usually we like to give the property management company a week, maybe 2 weeks, depending on the property that we're taking over to really get situated and just be ready for us to start on the CapEx. Other than that, after we give them that time, we're going 100% to get the project completed in a timely manner. Then this is one of the bonuses, is how do you hire a contractor? What's the proper way of doing this? So one, you want to hire somebody reputable. You want to make sure that they specialize in multifamily. Multifamily and single family are completely different. The numbers are a lot bigger with multifamily, but it's also, you've got to be able to have access to more manpower. You've got to be able to deal with those bigger numbers as a contractor, and your accounting has got to be a little more on point versus a contractor that mostly deals with single family. Online presence, there's no reason why a contractor should not have a good online presence or any presence at all online. If they don't, that's a huge red flag. So definitely look for Google reviews, social media, etc. References, definitely ask for references and definitely call them. You'd be surprised. I know I've called references before and they don't always tell you nice things. Case studies, if they should be able to give you some case studies, some projects that they're currently working on. We always invite our clients or future clients to come look at a project that we're working on and see how we work. They definitely need to have insurance, and you want to make sure, I would say a minimum of 1 million general liability, and then you want to make sure they put the LLC that owns the property on the certificate of insurance as additionally insured. This just makes it a lot easier if there is an issue and you need to file a claim, that you can. And then credentials, it speaks a lot when a company has credentials. Some of these associations, it's not the easiest to be a part of. Down here, I gave you an example of credentials, and a lot of the associations do a lot of vetting before they accept anyone. So the next thing, so let's say, okay, you're convinced, you're dealing with a reputable contractor, then it's the time to ask questions. I don't see this happen a lot, but last thing you want to do is get into a large project and not know what's going on, not have a clear scope of work. That's just a nightmare. It's an injustice to your investors and to the project itself. So one is the scope of work. You want to make sure you have a detailed scope of work and that everybody knows what's going on and that every detail is put into that scope. Then material-wise, if they're including materials for you, okay, well, you don't want to just leave it up to them to pick what materials, and you're going to want to make sure they show you the exact product they're going to be putting in, or they give you an allowance of how much each faucet or each light fixture is budgeted. Then the communication piece. So this is very important. What do they use software? Do they have a project management software that's going to keep us up to date and is going to give us progress reports, is going to show pictures and videos? If not, then what do they do? Do they send a weekly report? Is it just a conversation? The more the better as far as communication, obviously. We find that using our project management software is great because everybody stays on the same page, everybody sees what's happening. We do our schedules within there, we do our reports within there, and it works really well. Change orders, you don't want to be slammed with change orders. You want to have a clear process of what does that look like. The last thing you want is a contractor that thinks they can just do change orders and then submit an invoice and no approval process. So project completion, so you want to make sure you have a procedure for closing out the project. What that looks like, what does it look like as far as a punch list, and how does that happen? And then you want to make sure to get clear understanding of what type of warranties you're going to be getting from manufacturers, if any, And then as far as labor from the contractor, I want to leave some time here for questions. So let me kind of go through this quickly. Just some other good tips for multifamily investors. What should property owners, so some value adds to the properties that you can do. Obviously adding more units is going to increase your NOI. We've taken several storage units and turned them into extra units as well as office space, adding character to the properties. So we add a lot of cedar to our projects. We put them on the balconies, or you can even add them onto the brick. It just gives it that pop and changes the curb appeal of the property. And then, obviously depending on what class of property you're dealing with, the more you can add as far as technology, the better. And little things that just little custom things, putting USB instead of just putting a regular plug, putting a plug that's got USB ports as well. As far as affordable amenities to add to a property, dog parks are really easy to put in. As far as the fence, if you can make it a pretty simple fence, and then the equipment don't cost too much. Barbecue/sitting areas, we do a lot of that, somewhat inexpensive. And then repurpose some office space. Yeah, sometimes we run into these massive office spaces leasing office that can be turned easily into a business center or a work share space. Then as far as the interior unit renovations, a couple things here. If you're going to be doing new countertops, the difference between a stone countertop and a Formica is not that big of a difference. I would say go with the stone. As far as plugs and switches, replacing all of those, it gives it a fresher look when you walk into the units. And they actually sell plates that go over the plugs and switches where you don't even have to get into replacing the plugs and switches. We've been using those quite a bit. They cost more, but less labor. And then some quick things, dramatically changing the curb appeal, obviously painting the exterior, full rebrand if you're going to be changing the name, changing out all the signs, sealing, if you've got asphalt, sealing the parking lot, and then restriping, solar screens like I mentioned before, and then doing some nice landscape. This is an example of some of the common areas that we've fixed up. I remember this one here was it wasn't all open like this. We knocked out, had like a loft area and then some walls. We knocked it all out, wrapped this fireplace in some really nice tile, and as soon as you walk in, boom, it pops. One thing we've been doing, I don't have a picture here, but when you walk into our leasing offices, we pick the first direct wall that you see and we wrap it with wood, and then we brand it with the property name, and we've gotten some really good feedback on that. Then systems, I think systems are very important. I stress that a lot. The more software and systems that are in place, the easier it is to scale and to make sure that things get done the way they should. So I know as far as our construction company and also our real estate firm, we use a lot of different softwares and systems to make sure that happens. As far as our subs and vendors on the construction company, they go through some extensive vetting on the front end to make sure we're working with good crews. Then, like I said, on technology, we use a lot of different. Builder is our project management software, and then we review. This is more for commercial, but it's plans. Sometimes you do have plans with multifamily if you're messing with the floor plan. And then ProS is just our estimating software. And then we're all about team. I mean, in multifamily, more than any other industry, it's very difficult to get done without a team. I think no matter who you're using, you have to make sure your property manager and your contractors are all working together and they're all on the same page, as well as the ownership as well. Everybody's got the same goal here, and we all just need to make sure we're going the same direction. I've seen it where property managers battling with the contractor, and it just doesn't help. And then this is how you can reach me. If you want to know more about investing in multifamily, you've got my information right here, my direct number, my email, website. If you go to elevatecig.com, you'll see we've got a couple different free ebooks, one on the benefits of investing in multifamily and some other items, all over social media on Facebook, LinkedIn, and Instagram. Whether you search my name or you search my company name, you're gonna find us on there. We try to put out really good, useful content. And then as far as my construction company, you've got the email here. This is our office number. You got our website that you can check out, and same thing with social media. We're on all the different platforms. Like I mentioned before, here's the link to download these slides. So make sure to check that out. And then Melissa, I don't know where the questions are at.
I've got 4 questions in here. I'll go ahead and read them to you.
Okay, yeah, I don't know, I don't see it, yeah.
And I'm not sure if you've answered these already because some of them have been sitting here, but what is the name of the app that you use for capturing pictures and notes?
So for due diligence, we use HappyCo. They're not the cheapest, but it is the easiest, user-friendly. And then depending on if you use a contractor to help you, like we get a discounted rate because we put so much volume through it. So
Jake is asking, what would be the best way to find multifamily focused GCs like yourself in a given city?
Best ways are if you've got any local, well, one would be reaching out to other investors if you know other investors in the area and asking them. That's probably the best way. Then you could also visit apartment associations. If you visit their website or become a member, you can get contractors that way.
How much do you charge for per unit inspection?
On due diligence, so it's a great question. It depends because there's different levels that we offer, anywhere from as little as $15 per unit to $45 or so. If they want to go ahead and send me an email, I can dig in a little bit more on that and get them a better answer.
Yeah. Everyone make sure you get Jorge's contact on the screen there. I did post the link to the slides in the chat box just so everyone can copy and paste that if you would like. Let's see. Does your construction company work only in Dallas?
No. As far as multifamily, we do all of Texas, all of Oklahoma, and depending on the project, I'm open to other areas.
And then Steve is asking, what do you use for project scheduling, timelines, etc.?
So that we use Builder Trend. We've also used Red Team, but I think we're going to be going back to Builder Trend.
Mike is asking, do you typically renovate units when the tenant is occupying them? And if they stay long-term, how do you get the unit completed?
Yeah, so we've got different techniques we've used in those instances. One, we like to offer different packages to our existing tenants, meaning we'll give them, for instance, replace all their countertops and flooring, and then they agree to, let's say, a $50 rent bump. And then we'll come in and usually that we can easily work around without having to get them out of the unit. Or we'll offer something, replace all the light and plumbing fixtures for $75 rent bump. Something like that. So items that we don't need to necessarily get them out of there to do, and then get that rent bump and get a new lease in place. We can also, depending on the occupancy, if the occupancy is pretty high and we're having trouble getting units to upgrade, we'll offer the existing tenants an upgraded unit, then have them move into that upgraded unit and then upgrade their unit and kind of do it that way.
Wayne is asking, do you recommend getting multiple GC bids? How many do you think is optimal?
Yes, you want to be, yes and no. So you want to be careful not to burn some contractors out. If you're constantly getting bids from contractors and you're not giving them the work, eventually they're going to stop coming out and giving you an estimate. I would say at least 2. And then if you find one that works really well with you, I would say probably stick with them and just come up with a way to, make sure they're staying true with their numbers and not overcharging you.
Can you talk about your start in multifamily, what size, what's next, and your growth over time?
So the first unit we did, or the first property we did, was a smaller one. It was 37 units. I don't suggest doing anything under 100 units, maybe 80 at the smallest. The reason I say that, it takes a lot more time and effort on the smaller ones. I did learn a lot from it though. So since then, our sweet spot seemed to be like the 200 unit. And then we actually teamed up with a larger group and started helping them find deals and helping them complete their CapEx. And their focus is portfolios. So At that point, we started looking at 800 plus units. As far as where I see in the future, I'm trying to get to 10,000 units as soon as possible, and start vertically integrating more aspects of the business, because that way you have more control.
Dwayne's asking, do you have a suggestion in how to work with a property manager on DD effort?
Yeah, I think, once again, expectations. Like, make sure you get with them and find out, okay, well, how are you going to track everything? How are you going to track the units? How are you going to track simple thing as pictures, or what repairs are needed? I think they're a great asset to use, especially on the unit walks. You just got to make sure you're all on the same page, and let them know what do you consider an appliance that should be replaced, or same thing with the light fixtures. What do you plan on replacing on the light fixtures or the plumbing fixtures, so that when they go in and they inspect the units, it's actual information that you can then turn around and use for your CapEx budget. I would not suggest, I guess it depends on the property manager, but some property managers aren't so built for the construction aspect of it. So I would suggest using a GC for that part of it versus a property manager. When I say that, I mean, all the exterior stuff and the deferred maintenance and those items.
So, the next question is, how do you deal with no warranty on any of the work that was done on the property and owner cannot find any papers for it?
The owner, meaning the seller, I take it. So if the seller got work done and they have none of the warranty information, you should be finding that out during due diligence. So you need to make sure you take that into account. Yeah, you've got your roofs completed last year, but you have literally no warranty on it. So in your mind, you've got to take into account, well, I may have to cover something if it comes up. So make sure you get whatever that is inspected by somebody during your due diligence, and then just take it into account if there's no warranty.
The next question is, do you do in-unit washer dryer installation?
It depends. If the area is calling for it and it makes sense as far as what we're going to have to do to plumb for that, the cost to get the plumbing, and the rent bump makes sense, then yeah, definitely.
All right, we have time for one more question from Theodore. It says, do you have any suggestions on the team building, size and nature of team, steps on the path of acquiring a 100-unit property?
Yeah, I'll try to answer. I think what they're asking there is, you got to make sure you have every aspect covered. So if it's just you and you're not good at raising equity, or you've never raised equity, well, you want to make sure you have somebody on your team that has that experience and can bring that to the table. If you can raise equity but you have no idea how to find a deal, well, make sure you have somebody on your team that can locate deals and negotiate them. So pretty much putting the pieces together, making sure you have someone on your team that can locate deals, somebody that can supply the money to get it done, somebody with the net worth or liquidity to get a loan on that, and then somebody that can execute once you close on it, that has either asset management experience, construction experience, all those kind of things.
Thank you so much, Jorge. That was a great session.
Thank you, Melissa.
We're glad to have you.